please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Is there worse to come? We have two gentlemen joining in. S. Ravikumar, the President Business Development at Bajaj Auto, and Ajay Sahai, the Director General and CEO of the Federation of Indian Export Organization, join in with their take. Gentlemen, morning to both of you. Mr. Sahai, I want to start off with you because exports have slowed down considerably over the last 3 to 4 months. Where does the problem lie, and do you expect further deceleration as far as export growth is concerned?
In fact, if you look at export growth figure, they looks pretty impressive on the face of it. But if you analyze, they also show that everything is not good with the export growth. The very growth rate is coming down from 30% to 12% and now to 9%. Secondly, this 9% growth has come because petroleum exports have done exceedingly well. Out of total 9% growth, 6% has been contributed by the petroleum sector. On the contrary, the labor-intensive sectors, whether it's carpet, handicraft, textile, apparel, they are showing the negative growth. There is little modest growth in gems and jewelry as well as in leather sector, and that's why I think it's a cause of concern, because our employment-intensive sectors in exports are not doing well, which is definitely a challenge. There are a couple of factors. I think the fundamental factor is that most of the labor-intensive sectors are losing their competitiveness over a period of time. An immediate factor definitely is the liquidity problem, which has been caused by the GST refund. We hope that, and in fact, we have already requested the government to go for a massive clearance drive and clear these backlog by 31st of March.
Okay, Mr. Sahai, I'll come back to you on that point, on whether it is productivity or whether it is credit that is the problem. But let me pose the same question to Mr. Ravikumar. Mr. Ravikumar, although we have seen a fairly decent growth in global trade and countries like Korea are growing their exports, at the highest pace in several years, at 22-23% despite a high base, India is not taking advantage of the global trade. Any thoughts?
Lata, I think the country level and global level trade movements, I will leave it to the experts to analyze. I can talk only about two and three-wheeler industry and specifically about Bajaj. Basically, because Bajaj is the largest three-wheeler exporter. Every 3 out of 4 three-wheelers are exported by Bajaj, and similarly, every 2 out of every 3 two-wheelers are motorcycles are exported by Bajaj. So we have a fairly good standing in exports. But that said, I can talk about our company and the outlook there.
Okay.
Yeah. So please go ahead. Yeah.
No. Actually, our purpose for this discussion was to find out what is really worrying Indian exports. Aside from your company, Mr. Ravikumar, the general export growth has only been 9%. Import growth is even touched 40% in some months, and certainly running at an average rate of 25 to 30%. So clearly, probably even what we can buy from India, we are buying from abroad. Maybe because of a breakdown in supply chain, we don't know. So, we really want to see what is troubling exports and not what is going right, because something seems to be troubling as Mr. Sahai says. Mr. Sahai, what's your view? Is it that we are in many areas, like you pointed out, ready-made garments and some other sectors, even gems and jewelry has been flat to negative. Is it a productivity issue or is it a liquidity issue?
No, I primarily feel that this is basically a productivity issue. Let us reconcile to the fact that wage arbitrage is no longer with India. Countries in South Asia and Southeast Asia, including Cambodia, Myanmar, Laos, Bangladesh, Sri Lanka, Pakistan, they are in fact having lower wages than us, and they have a better productivity. So I think a lot of this has to do with the skilling of worker. Unfortunately, we have not seen much movement on that, though of course we have National Skill Development Mission. But I personally feel there is need for industry government partnership so that we skill the worker in the areas where the jobs are required in the industry. Of course, the currency is also putting some pressure on that. We have seen that Indian rupee has appreciated as against the devaluation of most of the currencies. Thirdly, I think liquidity is also an issue which I have already highlighted. The cost of credit is definitely a challenge for Indian exporter. To some extent, the SMEs manufacturers have been provided interest equalization, but I think similar facility needs to be extended to the merchant exporters who contribute to around 30% of exports, and even the service exporter, because cost of credit is equally important to them as well.
You know, cost of credit all the while was the same. I mean, it is not that cost of credit suddenly has gone up. Indian exporters, say 4 or 5 years ago, when global trade was doing well, we did manage 23, 24, 25% export growth. We have averaged close to 30 billion in some months. But this falling closer to 20 billion a month has happened more lately, despite global growth. So, I mean, is this a GST thing, Mr. Sahai, that supply chain has broken and that will be put back? Or is this something more long-term, as you are putting out, that we have permanently lost competition, lost to the competition?
No, in fact, I will say that GST is one of the factors. You have rightly said that in the past, with the same credit rate, we have done exceedingly well. But in those times, Indian rupee devaluation has supported the export sector. Let us also recognize the fact that in most of the sector, we are in a very price-sensitive segment. So the rupee movement definitely affects the exports. And that's why the long-term solution may lie in integrating into the global value chain, putting focus on branding, which can take away from that. But the fact of the matter is that when your profit is coming down, even a little factor like interest rate affects you definitely.
You know, when we spoke with you the last time, Mr. Sahai, you had said that with respect to GST, a lot of the tax refunds were getting blocked post GST coming on board. You know, we also have other issues like the e-way bill, which is affecting certain sectors like carpets, textiles, etc. Your own thoughts on you know, any of these issues have been resolved since the last time we spoke, or do you think these are problems that will continue to persist?
No, I think these are the issues which has been flagged with the government. Unfortunately, we have not been able to make much headway as per the figure which has been shared with us. In respect of the IGST refund, only 30% of the refund which has been filed has been cleared. And in respect of the ITC, the problem is more acute because out of close to 80,000 applications which has been filed online, only 44,000 applications could have been submitted manually, and that's why that speaks volumes of the effort which needs to be done at the government. Why an exporter who files an application online and debit his electronic register will not file application manually? The fact of the matter is that the tax authorities are simply ignorant. There has not been any detailed procedure which has been devised by the government, and exporter is running from pillar to post to file an application manually. We have initially pointed out that manual application will create a problem, and the fact of the matter is that this is adding to the problem at the end of the export.
So you're not getting any of the input credit now, or not easily?
I'm not saying I'm not getting it, but that's the only, you can say, a fraction of what we have already applied for that.
Okay, okay. Mr. Ravikumar, you're the one who doesn't have the productivity challenge. So do you think that this is a problem only for some sectors of exports, and you know, where you have international standards, there isn't a problem, whatever the price of credit?
Number one is, of course, productivity is not a problem for us, like you mentioned. I will agree with Mr. Sahai that the currency can, which was much more supportive, and it was in a different trajectory a couple of years back. That has reversed, and that can really cause a lot of trouble even going forwards. Look at the way the oil is again firming up. The second thing is, of course, same way the interest outlook a couple of years back was different, and the interest outlook today is very different. And these two things, coupled with, let us say, the input cost, base metals, you know, aluminum today is 2,200 plus, and only a few months back, let's say about a year back or something like that, we are talking about $1,400, $1,500 to a ton. So I think input costs firming up, oil prices firming up, the currency, the way it can dance, the interest rates firming up, these are all realities that are starkly facing us.
Okay, gentlemen, thanks a lot for